Why don't we have a little look at the stock market here today? Oh, NASDAQ right around an all-time high. S&P 500 right around an all-time high. Dow Jones Industrial Average approaching an all-time high. Beautiful green market. Meanwhile, we have so much that is about to go down and so much that is happening right now. It's almost on a scale like I maybe haven't seen in my 12 years being in the stock market. We got a presidential election that is about to take off, right? It's gonna be a crazy one, okay? We have stimulus. We don't know what's gonna happen with stimulus. There's talk about there could be round two. There's talk about there might not be round two. We're gonna have to see. That's kind of important, right? We have an unemployment rate that is in the double digits. Yes, it has come down, but it is in the double digits still, and we're gonna have to see how does all this get worked through as the economy continues to open back, hopefully more and more over the course of the next several months, if not the next year or so, right? Unemployment went from $600 to now they're talking about $400. Now they're talking about $300. Like, unemployment situation is quite messy, along with the mortgage forbearance and the rent forbearance and all those different things. Like, how's all this going to work out over the next 3, 6, 9 months? It's going to be very interesting, right? We have the Federal Reserve that has actually backed off a little bit in terms of their adding to the balance sheet for the Federal Reserve. This is quite interesting, right? So how's this going to work out? Are they going to start increasing again? Are they going to continue to kind of decrease? What's going to happen there, okay? We have Rona still going on. The good news is in the US, at least numbers are coming down. They're not as bad as they were a month ago, month and a half ago. That's very good news for us. But they're still really high, okay? About 25,000 news yesterday. That's still a very large number. Let's be honest, especially for a time period when it's summertime, when supposedly it wasn't supposed to be that bad in summer, and in the fall and the winter it's supposed to spike back up. We'll see what happens with that. Obviously, that's a big situation, right? Worldwide, the numbers are still continuing to climb. I mean, they're almost at record highs in terms of worldwide numbers very recently. The numbers are really high on a worldwide basis. And those are just some of the bigger things we have going on out there. Meanwhile, the stock market's over there sipping tea saying, that's none of my business. That's none of my business. I'm not paying attention to any of that. Whatever, I'm going up right now, okay? And this is kind of what we have going on in the stock market and with a lot of stocks in general, okay? I thought that was just like the best little kind of meme I could find for this type of situation, okay? So the question is, what do you do in a market like we are in right now with, possibly more uncertainty than we've seen, at least in recent times, probably since the great financial crisis. This is the most uncertainty. What do you do in a market like this? So that's what I want to answer for you guys here today. I want to go in depth about this. I'm going to give you guys several pieces of information so you can kind of make judgments out there and kind of tell you what I'm doing and what I'm paying attention to, the type of stocks I'm looking at in the market, where I'm seeing opportunities and where I'm seeing rip-offs in the market, which there are definitely, some not so good deals out there in the market right now. So hope you guys enjoyed today's video. As always, if you don't mind smashing that thumbs up button, that helps out the YouTube channel in a massive way, and I appreciate the thumbs up, gang. I definitely appreciate you guys. You help out the channel tremendously. And also, I'm super pumped because we just finally, after all these years, we finally have an about section for the team and kind of give you a little more information on the team that helps support me. And so we got that set up. That's the second link in the description down there if you want to check out that. We still got a lot more team members to add on to that page over time, okay? So let's get rolling with this. Let's be honest, guys. This market is greedy as a MF, okay? That's how, I don't want to get demonetized. This market is very greedy market. A matter of fact, I will go out there and I will say this is the most greedy stock market I have been in since I've been in the stock market the last 12 years. This is the most greedy, okay? No question about it at all. Let me just show you some huge examples of the levels of greed that are going on in the stock market right now, okay? Let's pull up Apple stock. Apple stock here today, up another 5% today. Another 5%. Apple stock, almost $500 a share here today it hit. Absolutely insane. And this is basically on the back that they're going to split the stock, okay? Let's be honest. And it's just ridiculous that this stock continues to roar higher and higher and higher to PEs and price to sales ratios and every ratio pretty much out there that the stock hasn't seen in the longest time. The valuation's gone insane, okay? Look at this. Just in the past 4 or 5 months, this company has added $1 trillion of market cap, okay? $1 trillion. That is beyond ridiculous in a matter of 4 and 5 months. What has changed for Apple in the past 4 or 5 months? Almost nothing. Has Apple launched any game-changing product or services that no one knew about, lately? No. Has anything happened for Apple that we didn't already know? No. Maybe numbers are a little stronger than we thought they were going to be. They beat analyst expectations. That's great. That's it. Does that justify a $1 trillion plus valuation move up for Apple? No, okay? This is pure greed. Pure greed in the end. It is just, the valuation's just gone insane on this stock on the back of nothing other than the company had a really good earnings report other than that. And I would say with an earnings report like Apple had, the stock deserved to go up, but did it deserve to add over $1 trillion of valuation? Absolutely not, okay? That's just preposterous. That's just ridiculous, okay? This is the greed that is going on in the stock market, okay? Let's talk about Tesla, my ass. So let's talk about stock I own, okay? This is greed on greed on greed going on right now, okay? Look at the screenshot. I have the screenshot here. This is from October 23rd, 2019, okay? Back when Tesla was $254 a share, okay? Now, after that, Tesla went on a massive run over the next several months, okay? And the market cap 3x'd in about 4 month span, okay? 4 month, maybe 5 month span, it 3x'd plus. And I thought that, to $800, $900 a share, I thought that was justified. The reason being is the company was growing massively. I thought Wall Street had disrespected the stock for too long. It was held down for too long. And it made sense for that company to have its valuation increase quite dramatically, which that's a lot of people said back then the stock was a bubble. I felt like that was justified, okay? Now the difference comes in recently, the move up from 1,000 to 2,000. Let's go to this slide, okay? I do not feel like this is justified. I feel like this is greed on greed on greed on greed, okay? The company is at a $200 billion of market cap in less than 2 months on the back of nothing, okay? I mean, absolutely nothing. Everything has been known that Tesla has out there. There's been no game-changing product or service launch from Tesla. Everything is exactly the same as it was before. It's just pure speculation and pure greed. Look at the move up since July, okay? From 1,000 to now $2,000 plus a share in a matter of less than 2 months. And the green part I have circled there, I thought that was healthy. When the stock started to pull back, started to even out around $1,400 a share, even a little under $1,400, I thought, okay, this is healthy. As a long-term investor in this company, I like what is going on there, okay? And then as soon as a company announces they're gonna do a stock split, the stock goes from below $1,300 to above $2,000 on the back of because they're gonna do a stock split. This is pure greed. This is not fundamentals based, okay? This isn't people that are bullish on the company long term that are pushing up the stock. This is massive funds front running this and saying there's going to be a lot of retail investors that get involved and buy all these shares because there's a stock split coming and we'll sell out before they sell out and we'll make money and they'll, probably lose money, okay, in the end because those folks will get shaken out of the stock in general. And I hate this stuff, okay? As a long-term investor in companies, I hate when, short-term people come in, funds, individuals, hedge funds, anything like that, and come play with the stock for a little short term like it's a little puppet. And that's exactly what is going on with Tesla stock right now. And that's why I think, if they want to puppet play us, okay, let's puppet play them back. Raise money, okay? Let's raise money right now. Why this valuation is absolutely massive and why it's gone up crazy. Because look at this now. We're sitting at a stock that has a $382 billion valuation on this. It's going to take Tesla so many years. This is coming from somebody that's insanely bullish on the stock and runs numbers on this company all the time. It's going to take us a ridiculous amount of years to fill into this current valuation of almost $400 billion. And it's just frustrating. This is pure greed that's going on in the stock market. Amazon. If Amazon came out next week and announces they're going to do a 10-to-1 stock split, that stock's going to $4,000, okay? Because simply the funds, the hedge funds, the investment funds in general, the retail investors, they're all going to pile in that stock left and right because, oh my gosh, they're going to do a stock split, so it's just going to go up. And it's like this self-fulfilling prophecy that, because it's going to go up, I got to buy in, and it's going to go up more, and I got to buy in more. And it's just ridiculous. That stock will go to $4,000 a share in a matter of a few weeks if they came out and announced they're going to do a 10-to-1 stock split. That is silly, okay? There's no other way to put it. That is silly. That is pure greed. That's it, okay? But we'll leave it there, okay? Let's talk a little bit about valuations for this market we're in right now. And you're going to see more greed, okay? This is out of Yardeni Research here today, okay? We're going to look at some PEG ratios. We're going to look at a lot of forward PE ratios, which is looking at the next several quarters, the next 4 quarters, okay? Not backwards looking, not, all those Rona periods when a lot of these businesses were shut down. This is actually looking at the next 4 quarters, okay? And we'll look at some current PEs as well, okay? We start out here. We're looking at the forward PE for the S&P 500 large cap, okay? And what we're going to find is the forward Ps for S&P 500 large cap are just off the charts. They're just ridiculously high. They're in greed territory right now, flat out. Simply put, okay, look at that. There's no time period in recent history that's even remotely close to this, okay? It's definitely greed on greed on greed right now. Let's look at S&P 400 mid caps, okay? The good news is with this, it's not as greedy, okay? It's not as frothy. The large caps are actually where the most greed is right now in the market. The mid caps are like, yeah, they have some greed, but it's not out of control greed like actually the large caps have, okay? S&P 600 small caps, greedy as well, but the good news is not quite as greedy as the large caps, which this is quite interesting. This kind of shows you how much greed is really out there for large cap companies in terms of people thinking those stocks will just continue to go up and up and up and up, and I got to get in, I got to get in. And it's not just people. Like I said, these are big funds that are doing this as well. And then from the other perspective, it's also from a safety perspective of, oh, I'll hide out in these big large cap S&P 500 companies in case the market goes down big. So it's really a two-pronged approach where one part's safety, the other part's, hey man, these stocks just continue to go up, so I got to get in these, okay? Let's look at this one. This is S&P 500 large caps forward PE ratios, okay? And this shows you on a weekly basis. I mean, look at that, guys. This chart goes all the way back to the tech bubble, and you really have to go back to the tech bubble to see numbers like this. It's scary, okay? S&P 400 mid caps, okay, on a weekly basis. This one, obviously, really high. You have to go all the way back to the tech bubble to see numbers like we're seeing here. That's extreme, okay? Now let's go ahead and look at forward PE ratios for the Russell 2000. My goodness, guys. Look at the Russell 2000 growth forward PE. Unbelievably off the charts. I mean, look at how high that is that I have circled there. There's no year you can even compare this to. And once again, this is forward looking. This is forward looking, not backwards looking, not the Rona quarters. This is forward looking. You know, we're just literally off the charts right now. That is unbelievable. That's the most shocking chart to me personally. When I see that chart right there, that's just like, like, are you kidding me? You got to be flipping my flapjacks. That's ridiculous, okay? You want to see another ridiculous chart? Look at this one. This is forward P ratios for U.S. small caps, okay? This looks at the Russell 2000. Look at that. I mean, we're in uncharted territories. You look at all those years in the past, and none can even compare to where the market is trading at right now, okay? And it's just thing after thing. We can just keep going through these slides. Look at the PEG ratio, okay? PEG ratio for S&P valuation PEG ratios, okay? This is price to earnings growth. Like, look at that. You know, it's come down a little bit recently. That's good, but we're still ridiculously high. I mean, absolutely ridiculously high based upon any historical standard. You can't even go back to tech bubble days to find it this high. I mean, that's extreme. You want to look at something like a trailing P? Obviously, any time in recent history, we have by far and away the highest trailing P. I think trailing P is much less important than forward P. I judge forward P much more heavily. But if any of you guys out there wanted to see the trailing P, yes, we are the highest trailing P we've been at any point in the last decade. And it's by far and away, okay? What can we basically make for a judgment on the market by going through all those slides? The market is bubbly, okay? Flat out, the market is really bubbly, it's really frothy for a lot of companies out there and a lot of specific industries and types of companies. Keyword is types of companies. It's just a bubbly whole situation, okay? I want to give you guys a lot of pieces of advice here, okay? Number one, okay, be very careful of growth stocks right now, especially popular growth stocks. And I'm talking about the type of growth stocks that you hear, you know, me talk about all the time, or other people in general, or the big financial networks. Any of those super popular growth stocks that you hear talked about every single day on CNBC or whatever you go on, okay? Be careful of those ones because everybody knows about those growth stocks, and it seems like, you know, almost all the funds are already in those stocks. And in terms of retail investors, the average Joe, a lot of them are already in these stocks, okay? So I would just say be very careful of growth stocks, especially the popular growth stocks that are talked about all the time, okay? That's my first piece of advice. My second piece of advice is be careful of big tech right now, okay? And this is kind of weird to say, be careful of big tech, but my goodness, guys, all the big funds are already hiding out in these stocks, okay? They're all hiding out. Every single big fund out there is hiding out in them. You know, all the index funds are obviously heavily invested in these stocks. You know, all the retail investors, even for the most part, are already in these stocks as well because they're big tech and they're looked at as, just no matter what, they go up over time. And so there's just crazy amounts of money that's been pumped in those stocks. We saw Apple. What was it? $1 trillion plus in valuation added in what, a 4 or 5 month span? What has Apple done to justify that? Nothing, okay? They beat an earnings report. Wow, okay? Does that justify $1 trillion plus increase in valuation? Of course not. Everything's known about that business model that was known a year ago. iPhones, okay, services, and all the other products. It's all known. There's nothing like huge all of a sudden came out. It's like, whoa, now Apple, no. It's just ridiculous, okay? So be careful. And by the way, the stocks I'm talking about, Apple, Microsoft, Amazon, Google, even a stock I own, Facebook, okay? Like I said, I'm not afraid to give it to stocks I own as well, like Facebook, Tesla. Although I will say, Facebook, if I'm buying something in big tech, I'm buying Facebook over the others. But regardless, all those stocks, all the funds are already in these stocks, man. They are, okay? Especially Apple, okay? They already jumped in these. They're all hiding out in those particular stocks. And eventually, money will rotate out of those stocks into other sectors, either because it's forced money, it has to be rotated, or because just these funds are going to look at it and they're going to say, dang, these valuations, even these big tech companies have to grow into this for several years out. And that's tough. And by the way, just because I'm saying this, it doesn't mean the stocks can't, continue to go up, because maybe these big funds continue to buy in. Eventually the money's going to run out. There's going to be no more money to buy in with. But, hey, it doesn't mean they'll stop going up today. They could continue to rise. Those valuations could continue to rise. Those 4Ps and price to sales ratios could continue to rise. All that means is they're getting more and more overvalued in the end. That's all that means, okay? Advice number 3 I would give you. Be on the lookout for beat down, non-popular value stocks. Keyword is non-popular, okay? I'm not talking about Coca-Cola. I'm not talking about Pepsi. I'm not talking about Procter & Gamble. I'm not talking about Johnson & Johnson. I'm not talking about the popular value stocks that every big fund knows about and every investor knows about these companies, okay? I'm talking about the non-popular value stocks out there that are little kind of more hidden gems that are still, good-sized companies, billion-dollar market cap, $2 billion, $3 billion, $5 billion market cap, but they're not talked about all the time, and they're not the type of stocks that people instantly think of when they think of a value stock like they do, Coke and Pepsi and all those other stocks, okay, and McDonald's, okay? And I could tell you, me personally, that's where I'm seeing the biggest opportunities in the market right now. The biggest opportunities I'm seeing in the market right now are not around big tech, okay? They're not around these super popular growth stocks. The biggest opportunities I see for an ROI over the next several years are actually these non-popular value stocks. There's a tremendous amount of those actually out there in this market right now if you're looking for some actual good deals. There was, somebody in the Discord chat sent me one last night, and I was like, I love this already. I got to continue to look into this stock further, but I'm like, this is like another one of those perfect, way under the radar, non-popular value stocks out there that I love. And I will say right now, as of recording this video here today, there's at least 5 to 10 underground value stocks that I love right now, okay? At least 5 to 10. So that just kind of shows you where I think the value is in the market. It's with these underground value stocks, okay? Once again, not in big tech, not in these super popular growth stocks that everybody knows about. Everybody knows about Tesla. Everybody knows about Zoom. Everybody knows about Shopify. Doesn't mean those stocks won't continue to go up. But I'm just saying, everybody already knows about those, okay? And everybody's already playing in those. And so if I'm thinking about, risk reward, it's not as attractive in those stocks. I love holding some of those stocks and whatnot. But I can tell you, if you're just thinking about the next several years, it's actually in those underground value stocks, okay? That's something I covered actually in that video I released yesterday. It was a super in-depth video, the GVD 123 strategy. I talk about growth investing, value investing, dividend investing. And this is why it's so important, because a market like we're in right now, the big tech, the growth stocks, they're so frothy, and everybody is playing those, man. And so you got to look for other opportunities. And man, you can definitely find some value stocks out there right now, guys. That's all I have to say about that. Okay. Advice number 4 I would give to you guys is buy a Tesla, okay? Buy a Tesla, because think about this, okay? The Tesla can drive you around, and while it's driving you around, you can actually research stocks, right? You can, have your laptop, your phone, and you could actually be looking into stocks while okay, I'm just kidding, okay? Advice number 5 I'll give, okay? I hope I got a few of you guys, you might have thought I was being serious there. Advice number 5, cash. Cash is extremely important right now, in my personal opinion, okay? Now, always, regardless of the market you're in, whether you're in a frothy market, an undervalued market, you should always be keeping 10 to 30% of your portfolio in cash, essentially. You don't have to actually keep the money in your portfolio. You can keep it in a savings account or something like that, but you always had that 10 to 30%. So let's say you have $100,000 worth of stocks. Then in my personal opinion, you should always have $10,000 to $30,000 in that brokerage or in a savings account or something like that that's ready to go in case you want to pump some money in the market. Never be cashless. And what I find right now with how hot the market's been lately and a ton of these growth stocks is people feeling like they have to buy everything in sight and they have to be 100% invested in this market because stock's just been going up so fast. And oh my gosh, you buy into the stock and then it's up 10%, 20%, 30%, and I got to get everything in. Just don't, I've been in that situation before with you guys, okay? I got into that definitely a bit in the end of 2014, into 2015, because it had been a really hot market for a few years, and it kind of just felt like, oh my gosh, man, I just have to be invested into all these stocks possible because the market's been really good and my returns have been insane. And so the less money I have invested means the worse off I am. No, okay? Always keep 10 to 30% of cash around. It's like me, if I go for a LaCroix and there's only like 1 or 2 LaCroix left in the fridge, I feel like I gotta get that LaCroix right now because, oh my gosh, I mean, it could just run out. Somebody could get it before I get it. And if I don't get it, oh my gosh, okay? Don't FOMO, okay? Don't FOMO around the LaCroix and don't FOMO around the stocks, okay? And I can tell you right now in this market, there's a lot of FOMO going on, a lot of fear of missing out, especially in big tech and those growth stocks, okay? A lot of that going on out there right now where people just feel like you got to get in any price. It doesn't matter what price you buy in, man. You just got to buy in. That's perfectly fair to say if you're in a big dip situation in the market where the market's dipped big, right? Or you're in a situation where a stock hasn't really moved much and you're trying to quabble around a 1 or 2% or 4% or, number or something like that. That's fair to say. But when you're looking at some of these stocks that have climbed 100%, if not hundreds of percent over the last several months, that's a little different, okay? It's not like you got to run out there and buy some of these stocks that are just, have gone up like insane. It just doesn't make sense, okay? Keep some cash around, okay? Believe me, the market doesn't go up in a straight line forever. You will get some dips in some great stocks you love. You will get some dips in the market in general. And unless there's some stock out there that you have to buy tomorrow, you can definitely hold off on it, okay? But like I said, man, guys, underground value stocks, that's where it's at right now, okay? So I hope you guys enjoyed this. As always, if you don't mind, smash that thumbs up button. That helps out the YouTube channel in a massive, massive way. And once again, if you want to check out that About Team section, I'm so pumped for that. We got a lot more team members to add in there, but I'm super excited for the ones we've already added. Thank you for watching and have a great day.